Hello everyone, today is April 21st and this is Wyckoff Market Discussion, session number 16 of year 2021, episode 243. In the upcoming events, May special is rapidly approaching. I had a chance to talk to Jeff Kennedy. Jeff Kennedy works for the Elliott Wave International, and we've talked about the curriculum. We're going to have a lot of good stuff for you guys. So for those of you who are into Elliott Wave and Wyckoff, or a combination of both, this is going to be a very special event. Then in June, we're going to have two specials, one on scanning with Johnny Skian and backtesting with Howard Lask. That will be followed in July with the special on the PNF and crypto market with Alessia and Bruce. Very exciting just because there are so many interesting nuances and details as to how we could use the PNF in the crypto market. So I'm looking forward to that. And as usual, each Monday, William Riordan and myself conduct the tape reading sessions at 9 a.m. Pacific. Each Friday, Stock Charts TV releases a new power charting episode with Bruce at 3 p.m. Eastern. Check those out on their website, on their YouTube, and on our YouTube channel as well. So we have a special class today. It's an open door class, meaning that we have some guests. And for those of you who are planning to sign up for upcoming sessions, we have a promotion for this week until next Wednesday. It's $79 per month. The regular price is $99. For those of you who are current subscribers at $99, we will automatically change your subscription to $79. So don't worry, you don't have to do anything. You will see this reflected in your next billing cycle. And with that, Bruce, hi, how are you doing today?
I'm great. It's great to be here. Two brief announcements. The Behind the Charts episode that we talked about in previous weeks came out on Monday, and you can just go to Stock Charts TV and it's go to the bottom of the page and you'll see the little icon for Behind the Charts. And I try to talk really about the whole Golden Gate University experience and some of the things that we did and learned, and talked about Hank and Ramon, and so hopefully you find it interesting. Also, I did a Your Daily 5 also on Monday, which is available on demand. You can find that in the same place there. It's a little, an icon for it. And I talk about campaign investing, campaign trading, and this is going to be kind of a new theme for me, and I'm sure Ramon also. And that whole campaign approach, I'm going to write a blog about it. I think that blog will be published tomorrow, so be looking for that. And I'm really excited about talking about campaign trading. So
all right.
That's all.
Okay, sounds great. Also, check out our new Wyckoff Crypto Trading Lab. This is the Discord group, and it's very lively and active discussion on anything related to cryptos. Alessio is spearheading that, and we're looking forward to seeing more contributions from you guys there. All right, well, with this, here's the plan for today. Quite a lot of things that we want to cover. We're going to first start with the Bitcoin, as we had a shakeout over the weekend in Bitcoin. So very interesting look. We'll talk about this. Then we'll talk about gold, US dollar, long-term charts of the overall secular trend. Fed rate discussion is going to be very interesting. Then we'll concentrate on breadth of the market. We'll look at the long-term NASDAQ chart, or rather intermediate term chart. We also will look at some of the PNF charts, trying to understand what kind of causality we might have there. We'll go into the tape reading on NASDAQ, and then we'll just look at overall markets. And after that, as usual, so for those of you who are new, who are guests to our WMD session, we usually have two major segments. each class. It's on the markets, and we want to give you our view of where the market is, what the trend is, what the long-term trend is, what the short-term trend is, if we are in the consolidation, specifically which phase are we in, anything on tape reading, and so on and so forth. And then the second biggest segment is always going to be selection. We want you to come and look and receive from us ideas about the groups and the stocks that are emerging in the price and also relative leadership. And today we're going to look at quite a few groups. Hopefully we can go through all of them. So look at this: recreational services, clothes and accessories, auto parts. Those are in the discretionary, distillers, soft drinks in the staples, financials with the consumer finance, energy was the renewable, exploration and production, pipelines, healthcare with medical equipment, medical supplies, biotech, and then industrials with railroads, suppliers, and machinery. So we have quite a big agenda for today. I just want you guys to know what's coming up, and for those of you who would like to stick around for the selection part of this session, definitely do that. By the way, I forgot to mention, this session is being recorded and we will be posting it on YouTube. So tonight you will see that. So you don't have to, go through the whole session. If you have to do something else, just catch it later on our YouTube channel, Wyckoff Trading Method. All right, and with this, Bruce, let's start our first discussion on Bitcoin. So a very interesting day. I believe that was Saturday. And the whole crypto community kind of like woke up. And usually, the weekend time is a period of liquidity where a lot of shakeouts could happen. So let's start our observations about this chart. Well, first of all, the trend is still up. We're still making higher highs and higher lows. And I think that fundamentally we need to recognize this. And until we actually break that long-term trend, we're still going to be talking about confirmations in the direction of the upward movement. So that's idea number one. The second idea is that all of the major secular tops in Bitcoin were hypodermic tops, where we have speculation on the way up and then urgent selling on the way down. That's just the nature and the character of this asset and crypto space in general. I don't think that we're seeing anything of the sort yet. I mean, one might argue that on the weekly chart, you have acceleration to the upside. But that acceleration that is associated with a lot of institutional buying as they are trying to position themselves in this space and they are acquiring a lot of crypto assets right now. It still has so much momentum that continuation is probably going to be more likely long-term than the distribution at this point. Actually, my own targets for the Bitcoin is 100,000 to 150 by the end of this year, depending on how everything's going to unfold. Idea number three, as we look on this chart, look at this shakeout bar. What are the similar bars that we see prior to that? Well, obviously, this change of behavior that starts this upsloping trading range. That's number one. And please note also the volume signature, the characteristics of the profit taking and selling at those moments, and how the recovery happens after that. And this one right here as well. So we have analogs in the most current structure. So now let's talk about specific scenarios. What could we possibly have here after this shakeout? I'm going to call this a shakeout attempt. And why is this a shakeout attempt? Well, because of the character of the volume, that's number one. Also the character of the buy itself, extended spread. And look at the demand tail. Obviously, some demand came and there was no follow through. And usually after this shakeout, we will be thinking about testing action. So here is our test. We're holding, we're not following through to the downside, and this is so far encouraging. Obviously, for the confirmatory purposes, we need to see the price moving higher or at least moving high and then consolidating again and continuing to the upside. That would be probably the most bullish scenario, which we're going to call scenario number 1, something like this. Then scenario number 2 is always is also bullish. So we might have more of the consolidation at this level and then continuation to the upside. And then just much deeper variations on the reaccumulation. So for instance, a variation on the test that actually goes lower to about this area right here, and then there is some kind of recovery after that. So that's scenario number 3, 2, and then scenario number 4. This would be a very, very complex a reaccumulation where we have phase A, phase B, and then phase C has a much deeper reaction, perhaps into a higher low, which would be structurally connected to this consolidation right here, and then recovery again. So Bruce, these are my quick thoughts on Bitcoin, and I wonder, what do you think about just the structure, these possible scenarios? And let me ask you this initial question. Do you think that the Bitcoin in the distributional pattern currently, because that's what's on the mind of a lot of people on our Discord and just in general?
Well, first, just a brief observation on the decline off the peak. First of all, each of these peaks is a diminished thrust from the prior. So that is a measure or a sign of diminishing momentum on the way up. And then you can see that each of these examples that are highlighted show very high volume on the initial break off the peak. And so, and that certainly is the case here after the very shallow upward thrusting action that we just had. I suspect that we're going to have more price weakness down to at least the bottom of that tail and maybe a little lower, as we saw happen in the 2 prior examples, because there was a tail and very high volume, and then it attempted to rally and then went down again. This is just a function of the CO. The composite operator is seeing all that supply come in, and they're asking the question, how much supply is there? And so what they discovered in the prior examples was that the volume started to diminish right away after that initial small bounce. The volume dried up as prices went down and retested the bottom of that initial tail or that initial drop on very high volume. I suspect that we'll see that again here, because the CO is going to want to see how much supply there is that comes out here. Now, I would not look at this, I mean, to get to the bigger and more important question, I would not look at this as distribution per se. I would be thinking of it, first of all, each of the important lows is a higher low so far. And so we have higher lows throughout. What would really start to cause me to question the upward movement, or that we're in a bigger trading range, bigger consolidation, would be a sign of weakness. And so if we get a sign, some kind of a sign of weakness, and then a rally, and as was drawn here, the rally is of poor quality. So you can see each one of these rallies that have occurred have been able to push Bitcoin up to a prior high and slightly higher. So if we were to get a change of character here, which would be a break, sign of weakness, supply still is evident, volume doesn't have to be as high as it was on the initial break, but continues to remain high, and you start to take out other key prior lows, such as the late February low, and then have a rally, and the rally is of poor quality, that would be the point at which we would want to reassess the idea of Bitcoin being able to go up, at least right now. It may mean that we're in a much larger, either a reaccumulation or a distribution. So that would be the way I would be thinking about Bitcoin here.
All right, sounds great. Well, let's move on from Bitcoin. If Bitcoin is a digital gold, Let's talk about the actual gold, the metal. And we've talked about a lot about this area right here and this structure. And we've said that there is some kind of compactness to this. So what does it mean? Why is the structure so compact? And why would we even say this? Well, if we would be comparing it to, let's say, the previous structure right here, where we see that volatility is increasing, where the spread, the downward spread, is increasing, and you kind of see how wide those swings are compared, let's say, to this swings right here, and compared to the spread in this area. We probably would say that this compactness is an element in the texture of a potential local accumulation, which could be followed by the rally. That could be also confirmed by the supply signature decrease, overall decrease since the capitulation bar right here. And that bar, by the way, was the most important bar so far in the local structure. And what we wanted to see is the ability of the price not just to attack and test it as price approaches this level, but actually to overcome it, break out, test the breakout, which happened in the last couple of days, and then continue to the upside. So with that, our most recent call in the last months or so have been to the upside. And our idea here is that the price is actually trying to reach this level right here, as it done before at the beginning of the year. I think that we probably will see a much better rally than we have had here. We're probably going to see the rally that will try to get to 1900. And that ability to overcome this resistance cluster will show the strength of this asset and will probably conclude the whole reaction, which is a reaccumulation type of reaction. Most likely we will have to consolidate somewhere here at the top, maybe somewhere around this area, Bruce, I'm thinking. So a change of behavior into this support. This seems to be the mean around this area right here. Change of behavior and then consolidation after that. What's your view of the daily chart of the gold, Bruce?
Well, going back to really late July, you can see that just from really phenomenal rally with a lot of volume, which was a climactic surge of a very good move up in gold. And the correction that we're in now has really, in many regards, discouraged traders and moved them away from gold and gold shares and towards other areas of the market. This whole correction here we're going to see in a minute with a different chart is within the context of a much larger structure. It's pretty darn interesting. But what we did is we focused attention. Oh, thanks. So, well, we can come back to this later, Roman, because I know we want to make some comments about that. But back in early March, we actually here on Wyckoff Market Discussion said that we were starting to buy additional shares or add shares in gold mining stocks. And I think we specifically mentioned Franco-Nevada FNV at that time, and it's done pretty well. And so the idea there is that is a classic oversold condition right there. And each one of those oversold conditions did bear fruit as buying opportunities, but really that last one really became the really, I believe, definitive oversold condition that we've had. Now, so far, you look at the late November to late December rally, and the one that we're in now is arguably is comparable. It's not overbought yet at the top of that channel. But the other thing that we talked about is that if we can get a sign of strength in this rally, that we could start to look for a point and figure count structure that might even reach back to, say, that late November low. And so we were talking about the idea that we want to be able to visualize the possibility of how the right side of this structure could form, and how we would be able to count or include the left side of the structure for accounting purposes. And it's way too early to count that. We could take some swing trading counts here in that March-April period, and those, would be, I'm sure they would be attractive swing trading counts. The only other comment I want to make on this chart is that, circling back to Bitcoin, is that notice how we talked about how supply came in off the peak in Bitcoin, and notice that in the case here, you had supply come in off of each one of these peaks, and the supply came in, and ultimately the market, after consolidating that initial break, had to go lower. And that is the function of large trader types wanting to see how much supply can come out. And if the CO is accumulating shares on the way down, they're going to want to see how much supply comes in and what becomes available at each subsequent test of an important supply break like that. And so you can see all that happening. And in each case, it went lower. And so this is the way they function. And now we'll see whether or not we can start to make a series of higher lows, which will be a change of character. Ramon?
Yes, Bruce, let's move on because we only have 27 minutes left for the market segment. So looking at the long-term picture of gold, it seems to me that the whole idea about the all-time high and how do we actually overcome this with the price action is always reminds me about a major sign of strength. So I started calling this a sign of strength over the all-time high. For the long-term bullish picture, we need to see overcoming, at least temporarily. This will show us the ability of the price to be above the all-time high. And then we're going to have this all-time high kind of like a backing up action. So it seems to me, Bruce, that this is exactly what's going on here.
Exactly. So when you put that last chart into the context, that little channel on the right side is that whole area that we just looked at on the daily chart. So you put that into context and go back and you can read my blog August of 18, where it pulled back to that support area, and then subsequently the rally that occurred from August of 18 up into into July of 2020 was a really spectacular campaign. And just to make the point that this whole structure on the left side on that vertical chart is a campaign structure. And so this is the this is what's so exciting is that even if you're a swing trader on a shorter time horizon, to have the understanding and the context of this much larger environment, those are monthly bars. And to be able to trade that uptrend in gold and gold shares off of that large structure is a dream for any good swing trader. Ramon?
All right. Well, I remember that in 2018-19, we've talked about gold. We opened our actually, cash positions in gold. Our calls were also based on the causality of this whole structure. And I remember how here in the WMD, we were discussing the counts that go to 2,000, which was a preposterous count at that time. Nobody would believe it. But that's what it is, Bruce, right? When we look at the PNF courses and we count them, obviously we count them first conservatively, but it kind of gives you an understanding and also a convincing strategy to follow a bigger, larger trend. So looking at the GLD PNF counts, what are we seeing as potentiality of the continuation of this long-term uptrend?
Yeah, so this is actually a pretty old point and figure chart, and it brought it's up to date through December 31st, so it's not current, but it doesn't need to be because we're localizing the accumulation area. But and I'm very curious to see what kind of account we get out of this backing up action we just evaluated on the daily chart. But I'll just say this, and that is that if we we take the segments, so we do a lot of segmenting on these large campaign structures. Segment A we went right to it. We went to 194 on GLD, counted 192 to 202, and look at how you had that big climactic thrust that went up, took out the 2011 high on that really beautiful upward move, and then failed back into their below the resistance area, and now we're in this, you know, multi-month reaction. But that's just segment A count. And so segment B counts up 240, 250, segment C counts 312, 322. And so this is actually a pretty exciting place, because you can see, now again, remember that this is through December 31st, so this chart is not up to date, but you can see the potential that could occur off of this reaction, and being able to then campaign gold with the potential of it going 240 to 250.
All right. Well, let's move on from gold. We have about 22 minutes for the market segment left. Bruce, we're kind of trying to create a sequence of events in our analysis. So Bitcoin, gold, now we're going to talk about US dollar. So quite a big structure. We've talked about the reaction and the potential rally of the support at the beginning of the year, and it seems like it was happening. So what's your view on the US dollar right now? What should happen now?
Well, we have done point and figure charts, and you can see those. You can go back actually in old power chartings to see them. But we had a distribution count up there in UUP as a proxy for the dollar that counted right down to the area of this demand trend line. It went right there, and we said at the time that between the point and figure count and going down and touching that demand line, that this should stabilize the dollar and stop the decline, which was substantial. And then there's a larger count actually, and that count goes down into the 20 area. And so I would begin to become seriously focused on that count down to the 20 area if we start to go down through that trend line. And if we start to melt through that trend line, then I would say that the bigger count is going to come into play. But so far, so good. And it's not to say that we couldn't continue to have more strength in the dollar here. And also keep in mind, as you know, Ramon's talking about, you know, the logic of all these different instruments. Keep in mind the rally in the dollar that came right at the end of 2020 and started to go up also coincided somewhat with the decline in gold. And so if all of a sudden you start to see, now it's turned down some, but you start to see the dollar go down to that 20 area, and that really does make the argument for that 240, 250 area in GLD.
And I would say really just quick tape trading techniques here, as we don't have a lot of time here. This is the most important break right here, most recent important break. So what do we see after that? There is a little bit of the exhaustion of selling. So the selling is kind of continues more under its own gravity, under its own weight. All of the rallies are attempting to come to this level, and both of them are failing. So this suggests weakness and still continuation to the downside, long term, not necessarily short term. So short term, we could have some fluctuations, ups and downs. All right, well, as we continue our discussion about the markets, let's talk about the overall very, very long secular picture. This is a Dow Jones Industrial Average. This is a monthly chart. And as you could see, you have these mega structures that populate this trend. We have mega structures that are consolidations. Those are in green. And then we have mega structures as rallies in between those consolidations. And usually those rallies are going to be associated with some kind of generational type of consumer behavior. So for instance, a silent generation has been pushing this rally up since the end of 1940s. Then we have the baby boomers generation originating the rally in 1982 into the top in 2000, and now the millennials generation are pushing the rally off the 2009 low. And as you could see, it takes a specific number of years, which is obviously we're just approximating here, but we are nowhere yet there for the over 20, 25 plus type of rally. So we are still pretty much um, orienting ourselves in the structure as an uptrend and as a potential continuation. And millennials are coming into their consumer power, revenue power. They are making more money and they're spending more. And as we know, the U.S. economy is heavily based on the consumer spending. So I think that we still pretty much in this very long-term uptrend. Please note that during the previous uptrends, you might have pretty sharp reactions, and this is what we just recently had with COVID in 2015, 16, 2011. So those are kind of like a very regular events that might happen during the rally of this type. Bruce?
Love that chart. It's the only thing I can think to add to this, your explanation is just the green areas really do represent the accumulation or reaccumulation zones, I mean, on a very large scale, and that those accumulation areas, which are countable on a point figure, are really what lead to the ability of the market to be able to rally up to the top of the channel and maybe even beyond it. So we have a substantial structure right there that goes from say 2012, 2013 back to 1998-ish, 1999, that area. And so that's a big cause, and we're still marking up that cause and with the potential of getting up to the top of that channel or even beyond it. So it's the only thing I could really add to that great chart.
All right. Well, if we're talking about sustainability of the long-term uptrends, then there is always a question of why. What's the driving force behind it? And we always state in our WMD sessions that it's the liquidity of funds available to the market participants that drives the prices up. And obviously, liquidity comes from Fed and fiscal policies. So, Bruce, please walk us through this chart on federal rates.
Yeah, so this chart I think is really, it's very simple, but it's powerful. And so let's go back and look at that period of 1990, say 293. You can see rates are pretty low. Back then, 3% was pretty darn low. And then all of a sudden, the Fed starts to become focused on raising rates because the market had been going up. Well, and then the Fed pauses in that rate raising strategy, and the market just starts to continue its important move up. But then the Fed's here is raising rates again into 2000. And that was just a monstrous bear market for especially growth stocks. So that was a really meaningful bear market after. And so when the Fed starts to fight the upward trend of stock prices, there's a period of time where the market can keep going up while the Fed is raising rates. Next example is 2002 to 2004. You can see rates are quite low. And in that time, the Fed is trying to get the economy out of a very steep recession. And then once that happens and the economy starts to improve, you can see the Fed goes on this just systematic rate increase scheme into 2006. And the market can continue to go up while that's happening, partly because there's so much liquidity created in these important lows that we're looking at for interest rates. There's just a tremendous amount of pent-up liquidity and momentum in the economy. Okay, so then you can see the rising rates eventually starts to take a toll on stock prices after a period of time, and you can see that big, beautiful distributional top in that goes from 2008, the Great Recession, it was called. And so now look at what we have here. 2009 to 2016, you can see that rates were just flatlining at the zero area, tremendous amount of liquidity being put into the market, and the stock market just soars. Rates start to go up, the Fed goes on, and this was, I think, largely Powell. Powell wants to normalize rates. Well, you can see that there's just this steady raising of rates off of the 2016, 2015 lows, and the stock market can go up, but look what happens. 2018, 2019, you can see that there's really a large trading range with ever widening reactions, rallies and reactions. So it's almost like the market became seriously destabilized. And I actually look at this chart and I believe that the COVID decline was somewhat part of, or an echo of, the fact that rates had been raised into the middle of 2019. And they had come down a little bit, but it was a tight money environment. And so the COVID decline, I think, really was partly related to the 2017, 2018 rate increase. But look where we are now. Rates are back down, flatlining near zero, and you can see that the stock market is just really going up. I contend that there's going to have to be probably a couple of years of Fed actively raising rates while the market is going up to be able to slow the stock market down and put in a distributional top. And as you can see right here, we have none of that going on right now. And it could be a year or two before the Fed even has the appetite to start cinching up rates. And so this, I think, is just a really valuable long-term data series that we should be keeping an eye on in Wyckoff Market Discussion.
All right, couple of thoughts from me. This type of liquidity, which was unprecedented, should have some kind of long-term effect. So what kind of effect would we have? Overextension of the long-term uptrend. So that's idea number one. The second idea, I like the discussion about this area by Bruce. So this is where the price stalled, paused. So therefore, we want to notice at what rate did it do it, right? So like around 1.5. So once the Fed starts going with the program of raising rates again, I will be looking at this area right here because I want to see what's going to happen with the price. So that's idea number two. And then obviously, you know, we talk a lot about growth stocks and how the interest rate influences them and so on and so forth. So the rate of ascent or the rate of change of interest rates is going to be very, very important going forward. All right, let's go to the next chart. This is a very interesting chart. We've done this many times. So I kind of redid this for today's session a little bit. Put two colors. The green color identifies the areas or the periods where we have a lot of breadth. This is the New York stocks above 200 moving average. And the whole idea here is the more stocks are above the 200 moving average, the more breadth we have, the more universal the uptrend is. And usually we need to also identify, you know, specific areas of what we call the momentum takeoff. So those are the areas where we have such depressed prices and overall market that everything is under 200 moving average, or at least the majority of the stocks. Here we see 5%. In 2008, 2009, it was below 3%. So you can imagine what kind of depression we had in prices at that point of time. The first leg up in a major uptrend is always going to have characteristics of a very broad breadth participation. And then that breadth is going to diminish. And it doesn't mean that we are not going to go down. So whenever you hear in the news that, well, the breadth is declining, it's not supporting the upward move by the price, be careful with that statement. It is not a true statement, because you have to go into the history of the stock market and actually look at this. Every time we make some kind of high in breadth, it doesn't mean that we stop with the price movement. You could see here in this light, brown color, continuation of the rallies, even after we have a peak in breadth. And those are the two main ideas that I want you to know about this chart. Bruce?
It's just fantastic. It's a great chart. And the only thing I can think to add is that doesn't mean that you can't have cyclical corrections along the way, but typically you'll have a lot of deterioration off the peak. Even so, for instance, you can have a sharp breakdown to that, say 40 to 50% level, and then just turn around and start to rally back up, and that occurred in 2010. Look at the beautiful base in the in that indicator there, which coincided with the base in the market and set up the conditions for a really good rally. It couldn't get as high as it did on the initial thrust, but it was a spectacular rally with a lot of appreciation potential in it. And you can see those all over the place. Ramon has highlighted them. So we just really watched these really closely. That's all I have to add, because that was just such a great description.
Thank you. Let's go to the next chart. We are at about 7 minutes, Bruce.
Do you see how Ramon just keeps me on time? He's like
We've
I
got
grew up in a railroad family. I'm feeling it.
We are so focused, Bruce. We gotta go. We gotta go.
All right. So here, the thing I want to go back and look at just briefly is 2020, January, February 2020, and also March. And you can see the, now what we're looking at is we're looking at 4-hour data, New York advanced decline minus New York advanced minus decline, 4-hour data. And then what we did is we've done a 10-period moving average and a 50 period just to smooth the data. And the idea here is that you're looking for, one, you're looking for deterioration, which means the lower highs, one peak to the next. So the January peak in 2020 is preceded or exceeded by the February peak, but the AD oscillator is diverging. The real trouble begins when you get the divergence and then the line just starts to just drop towards the oversold level, and that's where you can get some real serious trouble. But you can see off of those important lows, look at the big breadth thrusts that you have, which are similar to the discussion Ramon just had. Well, you can see where we are now is that you have particularly in March and then early April this year, and you can see that there's a series of lower peaks in the on the New York. And now that just means that you're starting to have a diminishment of the number of stocks that are participating in the advance, and you could break lower from here, maybe even take the market down. But I suspect that unless this line starts to really just head towards a deep oversold, this is just going to create a buying opportunity. And so the other thing that I would point out in this indicator is that you can see that at almost all the important key lows that you have divergent characteristics at the lows where the line's starting to rise ahead of prices. And so that becomes just a huge trading tool for getting along the market on important oversold conditions. So anyway, a little bit curious and maybe slightly concerned about the series of divergences that are taking place right now that may set up some kind of a correction of a sub-intermediate nature in here in the S&P at some point. But if it does, I suspect it's going to be a great buying opportunity.
Two ideas from me. So we've talked about the momentum takeoff that is being reflected in this data as well. So for instance, here, 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 and here. So this is where they're aggressively buying also here. And then look at the trending environment, what happens afterwards. We don't have a lot of, acceleration to the upside or to the downside, right? So very, very shallow trending environment, very, very shallow without any significant peaks and bottoms. So that's idea number one. So we are in the trending environment right now. Secondly, how would we go to the low? Well, every time we go to the low, we have, as Bruce has said, a series of lower lows. So the actual low in breadth is going to come after lower lows. Well, we kind of still don't have this. We need to have it like this and then this. That last leg would identify a reaction. So for now, we don't see that. So for now, it's just a trending environment.
Yeah, I think that the real trouble comes when you get below the zero level. So here you have zero in the middle. And when you start to trend down below zero into negative numbers is when you're, especially on 10 period and moving average basis, that's when you're become vulnerable in the broad market, and we're not there.
All right, let's go with NASDAQ now. Okay, NASDAQ 100. So this is the trend of the COVID low. We already had one overbought condition which was preceded by the climactic run into the buying climax, change of behavior suggesting a trading range, and then just testing actions before we break out of the trading range. A very conventional volume signature here, increase on the change of behavior, decrease of the supply into the formation. The same happens around the last consolidation where we have increase of the supply and then we have decrease of the supply. So that just in the construct of a much larger trend happens on institutional profit taking and institutional rotation from one theme to another. Specifically here on September 2nd, we started observing, and Bruce will talk about this, how we have the switch rotation from growth to value. And since that top, we kind of had it for quite some time now. So what do we see in the uptrend or in the stride of the trend? We still have quite a lot of room, and we are somewhere here around this area. We still have quite a lot of room to go to the upside. And the key idea here is a confirmation. Could we not come back, let's say, to the support area and just continue the movement to the upside? So I want you to remember this as an idea. And then even if we go down, we will have to understand that maybe we are in a much larger trading range. And we will have to see what kind of bounce we're going to have off this. The next idea is, do we have a potentiality or causality in order for us to reach this objective? And is it confirmed by maybe some other reaccumulation accounts, and more importantly, by their regional accumulation after the COVID decline? Bruce, I'm going to jump right into the next chart just to continue with this thought. So let's look at the P&F count of NASDAQ 100. We're seeing a regional accumulation, kind of a different look than on the vertical charts. Why? Because the P&F is the function of volatility, and volatility was just incredible during the bottoming of the COVID low. So this is being reflected in the number of columns here on the P&F chart. And the target that we have, one of the targets, is above 16,000 on NASDAQ 100. Then the next two reaccumulation areas, number 2 and number 3, we're seeing that the targets are confirming the same area, and those targets do not have to be precise. They just have to be in the vicinity, as we would say, in the zone. So, Bruce, I really am liking how there are confirming counts and how on the vertical chart as well, we're seeing that 16,000 or slightly above identifies for us that overbought condition that could probably lead to the same type of, environment that we had back in September. Your thoughts?
Oh, this is such a classic concept, and it's remarkable how well it's working here. So the fact that we go to the top of this channel and we get right into the count area of the accumulation and two reaccumulation structures that all confirm, which was really, I mean, tip of the hat to Dr. Pruden, who just really pounded on this as being a really important concept, is stepping stone confirming counts. And so we have the accumulation count and then two stepping stone counts that both confirm those higher objectives. And honestly, we put this chart together, this count together back in March, April, May of 2020, and the count line was a 7,200, and nobody in the world thought that there was any possibility that the NASDAQ could work its way back up to that, to these count levels. And here we are, more than double, the potential to more than double off the count line in the lows. And we have additionally two confirming counts that also confirm those objectives. So this is just really great. It's a great principle in how to trade, and if you know how to do point figure analysis, this is just an incredible tool.
And also think about this, guys. It's a convincer strategy. How could you convince yourself that at the COVID low, we're going to have a very substantial recovery? You go to the PNF and you measure the causality. Well, we could measure the causality for any instrument. So here is the S&P 500, Bruce, and this is something unusual. So we are taking the data on 30 minutes. Reversal is one box and box size is 20. So Bruce, it's kind of unusual that intraday structure could also show the causality for the price to go to the specific higher levels.
So here's just an example about how we can use point figure analysis on the the sub-intermediate or the short-term and swing trading environment to be able to trade the market up and down. And we've actually been showing this chart for a while now. And because when that count was completed in late March, at that time we started taking that count across there because it's such a beautiful structure. So there's a beautiful sign of strength, and then there's a backup, and then a really nice pivot off of that. And look at where we are. Look at this incredible rally that we've had off of that level. So at the count line of 3860, it counts up 4360, 4480 on the S&Ps, which is a really substantial move. And here's the cool thing. The chart, because this is a chart that we made today to show you the updated status, but the original chart that we did, and this is how robust point figure is, was a one box chart, swing trading chart, intraday 30-minute, but we did 10-point scaling and we got 63 columns across. So this time we use 20-point scaling, we get 31. So it really does have a robust quality to it in being able to change parameters and still getting effective counts. And I think between these two count objectives, we have maybe a 10-point different from the original 10-point scaling count. So here we are, further to go. We're around 4160, and we still have the potential to get to 4360, 4480. And look at how beautifully it's acting here. Look at how it's just jumping up and just working its way higher. Ramon?
All right, great. Let's go to our tape reading tool. So this is where we are looking at the swings and compare them to other swings, where this is where we're looking at some bars and we compare them to some other bars, we are judging the sell-in against the buying. And we want to understand where the sell-in comes, whether the sell-in or supply is being observed, or whether there is enough testing for that, and whether there is enough confirmation for the continuation of the rally or continuation of the reaction. So starting with September 2nd, a change of behavior bar that has a lot of volume signature, which is being followed by the 2 or 3 bars in a row with high volume signature, but not a lot of progress to the downside. At least this progress is starting to diminish. That shows buying characteristics. The next reaction cannot produce the same type of a length of the downswing, and also has a lot of tails on diminishing supply character. So that suggests exhaustion of the supply and also some buying. That produces a rally. The rally stops where it logically should stop, around the area of the previous sell-in. And in these 2 bars, we could observe how supply is coming in and suggest if the reaction to the downside. At the bottom of this reaction, which forms a high-low, a very important concept, we see increased volume signature, which suggests on somewhat marginally limited result relative to the previous low, that the buying is happening and demand is coming in. That demand is being confirmed by one of the most important bars in this formation, a breakout bar that sees a substantial increase of the demand. We need to check out supply at the higher level as well. Supply is coming in, but yet next bar, this red bar, has increase in the volume signature. So effort to push the price down increases, whereas the downward result is decreasing. Bullish, suggesting that we are going to go into a test, and which is going to be followed by a rally, and we do exactly that. Here's our test at the higher low with the diminished supply characteristics, and then we go into the rally. The rally is kind of very interesting because as the rotation started to happen since September 2nd, we see a lot of profit taking of institutional kind where supply is increasing. But what is the result of all of those selling by institutions? There is practically none. So that still suggests a continuation to the upside. And here, for the first time, we see a change of behavior, something different in terms of the extension of the reaction, something maybe similar to what we've had here. And that is suggestive of a different environment, not an uptrend anymore, but more of the consolidation, a trading range. And here it is. We're entering into the trading range. The upthrust action here, where the selling occurs again, is still suggestive of strength, because we are overcoming the previous buying climax high. But this obviously kind of ugly and nasty rotational reaction produces a level of uncomfort for us, because this lower low could be interpreted as a sign of weakness. It is written with all of these increases of the supply, but then if we look at the bar level, we see specific bars where the buying occurs. Those are being confirmed by the ease of movement bars, where demand is decreasing, volume is decreasing, and yet result to the upside is increasing. So ease of movement. We've been very bullish around this area right here, and then a bar like this comes, and it kind of, in a way, derails the bullish bias analysis. But the key was overcoming and testing of this bar. So we see that this level has been tested multiple times, and every time each reaction is diminishing in the character of the spread, and also in the character of the volume signature, or in the character of the supply. So a good test in action suggesting a rally. The rally starts, there is quite a lot of momentum, and then obviously a big question of why are we rallying without any increase of the demand? Is this something that we that is sustainable? And it is obviously a sustainable rally under the condition that supply is diminishing significantly. And that's exactly what's happening here. I would be saying that the buying zone is right here around this area. So if we're still going to go down from here, and by the way, today's bar, even though there was a lot of buying, I still would like to see a breakout out of this because we are covering the body of the previous red bar, down bar, but we did not commit to the upside. So I am a little bit concerned about today, and I want to see more confirmation. Bruce, any additional thoughts here?
No, that was great. Just reiterating the idea that I recall us having our Wyckoff market discussion back here in this buying area where late March, where the volatility was really tightening up and we went into a hinge or a pivot. And you just did a wonderful analysis of that area at that time, and with the point and figure work making the case for these for higher prices and for a really important rally or a good rally, and also the rally emphasizing the large cap growth and how large cap growth was going to come back in and rotate back in for a while, and that's exactly what happened.
All right, let's move on. And here is just an overall look of the market. So this is just additional chart. This is a very usual regular screen for us. So Bruce, I just want to point your attention to Russell as we discussed the Dow, NASDAQ, and S&P. It seems that Russell is still pretty much in the trading range. Today was a really good day. I like that this is a high low. I like that today's bar is covering the majority of the losses that we've just had. Also, it acts maybe slightly as a local spring to this area right here, and demand is slightly increasing, so a positive development.
The Russell has been really a dominant leadership position index for a while now, and you can see that. You can't really see that in these two sort of thumbnails, but on the NASDAQ 100 next to it, the NASDAQ 100 was actually underperforming the Russell for quite a while. And then you can see where after this hinge developed in late March in the NASDAQ 100, you can see that the NASDAQ started to really go and the Russell just hit the wall. And so that was an important rotational shift that took place right there. And it's just an interesting phenomenon that all of a sudden the Russell kind of fell out of favor and the NASDAQ just became real dominant again.
Okay, well, let's jump really quickly to this idea of the rotation as we're talking about this. So I thought it was a very brilliant call back in September when you started talking about this rotation. So we were right here. We are consolidating. This is the Russell 2000 against NASDAQ 100 market proxies. Those are ETFs, IWM and Qs. And then the call here was made that the value now is going to be under a heavier institutional accumulation, and therefore it will outperform growth. And growth segment will be used as source of funding. So I thought that was really great. So Bruce, please update us of where we are and also talk to us about this beautiful PNF chart.
Yeah, so anyway, the idea here is this chart on the right is a relative strength chart, and it's the Russell IWM ETF to the triple Q NASDAQ 100 ETF, and these crazy downtrending trend lines are trend lines that have been in place for 8-10 years of growth dominance as defined by the triple Qs and other approaches also. But then all of a sudden you had this deep oversold condition and an accumulation area. And then in September, you had a spring and then an October test. And just the grinding rise in the Russell compared to the triple Qs was kind of a very important change of behavior. And now everybody's talking about it, but back then nobody was talking about small cap or value being able to compete with growth. And we've shown a number of other studies on that too. And unfortunately, I've been around so long that I've been able to see the rotation from growth to value, you know, in three big secular time frames over the last 40 years. And so here you can see that I think this is the first move of value in relation to growth. And growth is going to have important rally phases, which is what's happened since mid-March. This point and figure chart on the left is a slightly different look, because here you have Vanguard value, which is large cap value. Russell is small cap value. And this chart actually is a point and figure that goes back to 2013. Downtrend channel. Look at that beautiful channel there with a supply line over it, solid line, and then the oversold line below it. Well, part of, if you look at the yellow box on the right at the bottom, there's your oversold condition in this data set. But notice the distribution in green, and then the yellow redistribution and the red redistribution. This is the same concept that we just looked at with the NASDAQ 100, but in reverse, distribution and two redistributions. And they all more or less confirm each other, and look where they confirm each other, right at this oversold condition after a very long 8 to 9 year downtrend, which is just basically value underperforming growth over that period. And so this just also points out, I'll make one last point, and that is that you can do point and figure charts on just about any kind of data set and get these great results. And our attendees, our community who submits charts to our Wyckoff Market Discussions week in and week out, do some of these great relationships. It's really, really fun to see those. And so I just leave you with that. And I just think this is just a fascinating set of data. And it really does show that I think that a very important rotational effect is going on. And I saw some headline here. One of the real themes here is the SPACs as a subset of IPO, and that the SPACs are starting to, you know, have some more important trouble. So I think that in some regards, the IPO effect is exhausted, which happens typically at the end of the growth stock boom. And so, yeah, so I think that there's a lot of opportunity ahead of us, but it's also going to involve some rotation. So the key to making returns in the future is going to be really to focus on and be aware of the rotation effects, which we intend to do right here.
All right, well, let's continue our discussion about the rotation, and let's look at the sectors. And now we're starting to talk about the selection. So this concludes the market analysis segment, and we want to understand what sectors, groups, and then stocks are in harmony with the overall market bias, which we still define as the long-term uptrend bias with the attempts to overcome the trading range resistance right now. So we're looking for the candidates to the upside. And Bruce, looking at the sectors, what catches your eye? What sectors are in harmony with the market, in your opinion?
Well, the ones that really stand out to me is healthcare. Look at that beautiful accumulation type structure that's taking place there, and all of a sudden we have resolution up and out. This looks like the early stages of that accumulation or reaccumulation cause turning into a markup. So I think this can be a very important place to be focusing our attention for the months ahead. The other one is that technology just continues to act in a really stellar way. You can see there a nice accumulation structure in the form of a reaccumulation up and out. Look at it backing up to the breakout level. So that looks like it could very well be the beginning of an important new uptrend. And so you can say that about consumer discretionary. Materials just continue to just march their way higher. And and then of course you can see real estate is just acting great. Also, I think what's really exciting is utilities. Look at how big that structure is going back to, say, November, December. The thing is about utilities here is that they are a reflection or a measure of the broad economy. And so when you have ever greater demand on utilities, it's because the economy needs energy to be able to consumers to run their their cars and their houses and all that, but also it's industrial production. So this is exciting too. Ramon?
Yeah, I mean, if you look at all of the charts, guys, what I like about this is that every sector is in some kind of bullish pattern, whether this is a rally out of the formation or a sustainable uptrend. They kind of repeat each other. What does it tell you about the overall market? The overall market is definitely bullish, and it's still up, except for maybe the energy that had this, most recent reaction. The anecdotal story is that, some of my friends came to me yesterday, literally yesterday, and they were asking me questions about the energy stocks. And sometimes you could catch those moments with that bearish sentiment, where there are some worries. And then what do you know? Today, we saw a lot of buying in energy sector, and we're going to look into this. But the main idea here is that we are very, very bullish, pretty much bullish in everything that we're seeing. Obviously, tactics plays a big role, but overall trend, long-term trend is up.
All right. Let me ask you something, Ramon, just very briefly, and that is, you had shown that breadth thrust chart early on, and here you have all these different sectors which represent pretty much all the important sectors of the stock market, and they're all acting for the most part really, really well. Isn't that just a reflection of that breadth thrust?
Absolutely. Yes.
Yeah.
Here it is. Hold on a second, right here. Yeah.
Yeah. So the fact that the sectors are broadly acting so well right now, I think argues for the idea that this trend is robust and it has much further to go. Not that there won't be pauses along the way and some, reactions, give and take in the trend, but and also keep in mind that there's deep value, there's good value stocks and good dividend stocks in each one of those sectors.
Well, let's talk about the stocks, Bruce, then, right? So here's our plan of attack on industry groups and stocks. So we're going to start with recreational services. Let me go to stock charts. So stock charts is the service that we use a lot. We have a lot of connections with stock charts team. Please check out their software. It's just tremendous. The way how we approach selection usually is actually in multiple ways, but
we know some of the bloggers at Stock Charts.
Do we? Yeah. Okay. Yeah. So Bruce has been blogging since what, 2015, about? 16?
About, yeah.
Yeah.
15.
Yeah. So check out Bruce's blog. It again, every time you go to Bruce's blogs, it reads like a book. So start at the beginning, and this is usually my advice to students.
Every time you read one of my blogs, an angel gets his wings.
Oh my goodness. All right. Okay. Let's continue. So this is the page that you could find under the charts and tools, under the industry summary. I like the table view. It's just, what we've been using for so long. So you have the sectors and you have the groups in the sectors. You could look really quickly at thumbnail of the chart and really judge quickly the structure. Then you could go to the level of stocks. You could filter them based on the cap size, or let's say on scooters, whatever you want to do. So today we've already prepared this list. So we're gonna, just because we don't have a lot of time, we actually have 15 minutes left. So it's probably like 20 seconds, Bruce, per stock. We have to go through 45 stocks.
By the way, this is great. This this is just a great technique for going through and identifying really good ideas. So, but anyway, that I'll just say that for now. But a really good time-saving process.
Let's just say this. If you're gonna come to our classes, we're gonna go into more details, and actually we heard from students how it was so valuable for them to see how we do this, right? So we're gonna show you some elements of this selection algorithm today, but we'll definitely will expand on this in future classes. So let's look at our first group, recreational services, under the consumer discretionary sector. And in this group, I'm sorting them by the cap size. Let's start with the Norwegian cruise. So Bruce, pretty good day today for the cruise stocks. Look at the reversal right here, and that comes out of the small consolidation. So what's your quick 10-second view of the stock?
Well, just the place that you would expect to see a hinge, which a classical Wyckoff term. Look at October, September, October in Norwegian. You can see the hinge there, and off it goes and starts an important rally phase. So I think the next level for Norwegian Cruise Lines is probably the 2020 highs back there in December 2019, January 2020.
And if you want to think about much longer time targets, probably around 60, about this high. So that would be about right. Okay, let's go to the next one. Let's look at something different. Let's look at Planet Fitness. So, I mean, it's really hard to kind of even comprehend that, you know, a stock like this or a business like this will quickly recover. But look at the very steep recovery and look at this consolidation right here, which is also
right there, key resistance. Yeah.
And then we are seeing climactic action with the climactic volume signature, and then another apex or hinge, and we are about to resolve this. So pretty good price action on this as well.
By the way, we put a lot of attention onto relative strength. We won't do that so much today because we're time constrained. But look at SeaWorld. Look at the incredible jump in relative strength in February, and then the consolidation in relative strength is really flat with price, which shows that this is really leadership. And now it's resolving a trading range. It's already up and out above the year ago highs, and it's starting to pivot up again. This is just a classic place. And the relative strength really just helps to confirm that this is an important leadership stock. It's an economy reopening stock.
Yes, Bruce, I really like this area right here, rate of change for both the price and the relative, confirmed by the presence of the demand.
I actually believe that relative strength is like X-ray vision. And so we spend a lot of time looking at both those.
Let's go to the next industry group, clothing and accessories. This is still under the discretionary sector. Again, I'm sorting by the cap size so that you guys would see this. And then let's go and look at Heinz brand. Bruce, your quick comments?
You know, a beautiful jump up and out, and then a consolidation. This is one of my favorite views, which is when you can get an important jump that takes out overhead resistance, and then the reaction to that is just to become real dull and quiet. And you can see that happening both in price and relative strength. And now it looks like it wants to turn up again and start to move. It has a really good yield and has relative strength. So the institutions, I think, are just going to start giving this more love.
Okay, let's go to Under Armour. So again, very good day today. We've seen a lot of buying today, so I'm kind of happy, Bruce, that we're having a class on selection, on a day like this. So makes our job very easy. So COVID-19 low, there is a lot of causality, hugging of the resistance, very good, interesting pattern. David Weiss talked a lot about this, which usually brings us to a valid breakout and a really good rally. A little bit of the climactic action right here, which goes into a reaccumulation. Supply is diminishing throughout. The relative strength is in the established uptrend. So very, very likable chart right here. Okay, let's look at something interesting, Bruce. This is Lululemon. And I think that we are in such a beautiful reaccumulation pattern. Talk to me about that.
Yeah, so this has been a prior leadership. You can see if you look back at 2020, notice how it had one little relative strength blip of weakness in March a year ago, and then got right back into its relative strength uptrend and price uptrend and became dominant leadership throughout. And so now, starting in September, when we had that climactic surge in Lulu and the market as a whole, the relative strength turned down. But the thing that we look for with dominant leadership like this is for it to eventually reassert itself. This is looking an awful lot like reaccumulation. And the fact that it went down and sprung in early March, sprung the September lows and then turned up and tested is really, I think, an early indication that Lulu's going to try to get back to the highs. And I would suspect it's going to reassert its dominant leadership position.
Okay, great. Let's go to another group right now. Let's go to autopods. And again, I'm sorting by the large caps or mid caps and small cap sizes. Okay, so Borg Warner, really beautiful chart, and please look also to the left. Extend this chart and look at this whole formation, long-term formation. And then in terms of the price action, higher low, higher low, higher low after a sign of strength. So we're in the backing up action on the top of this formation right here, which is exactly how we would be expecting the price to behave. Really good recovery of the temporary commitment to the downside. Really good bar today. The volume does not have to increase, suggesting that supply is in strong hands. And then we've established the relative strength early on after the COVID low. We've been basing here, so what we would like to see is the continuation of the relative strength outperformance by the breakout right here. Okay, Bruce, please take GPC, genuine parts.
So the comment I want to make here, and we work really hard at this, is that we love stocks that can get into uptrends and then just persistently march higher. And, versus stocks, which we love, that stair step higher. And often what happens is, like you can see that GPC stair stepping its way to its prior highs. And then it took out the late 2019 highs here in March, April. And I believe that Genuine Parts is in a position with its positive relative strength where it could start to just go into a persistent uptrend and just start to just march higher week in, week out, day in, day out, week in, week out. And I think it's a candidate for that, which is really, when you can find those and get on those, they can be really rewarding. So I think that's possible for Genuine Parts.
Okay, let's go to the next one, XPEL. So this is a growth stock in this group. I really like those. Usually those are going to be smaller cap, but look at how the price moves. I mean, we recover from the COVID low very quickly. Again, as Bruce mentioned, those stepping stones, one over another. And I like the rallies. So it just shows that there is definitely a lot of demand for this particular stock. Look at the relative strength. There is no doubt that this is an uptrend. A base in the relative strength, a base in the in price action. Really good day today, and we are on the edge of the resistance, trying to break out. Okay, let's go to something else. Let's go to the kind of staples sector. Let's look at the distillers and the stocks that we want to look at, Bruce. So here's the first one, Brown-Forman. Please comment on this.
Well, just a look at that beautiful jump in September, and then it went into a range-bound condition after that, and now I think that March decline was really important because it did not get back down to the late October low and started to become very dull and quiet and had some really good testing. And now here it is working its way back up, which to me signals that this is a reaccumulation that is very near completion. Best thing that could happen here is that Brown-Forman just works its way up to resistance around that $75 level, and then it consolidates without being able to give up any ground to come back in to the structure, and that would be an important change of character from anything that's preceded it since September.
All right, let's look at Constellation Brands, also confirming that this group is in the uptrend. So we have most recently the structure that starts with the buying climax, and then supply is just going down. Supply occurs right here on some news, and as supply increases, we're registering a higher low. So effort to the downside to push the price down is increasing, yet the result to the downside is decreasing. That's a bullish behavior. We need to see the price continue its upward movement, and we also need to see the relative strength confirming that type of uptrend. All right,
and
let's
keep in mind that each one of those stair steps along the way there is building causal count for higher prices.
Bruce, we're at 427, so we'll probably need like five seconds per chart. Let's go to soft drinks.
I'll just.
I know. Yeah, this is
good.
Like
yeah, bad. Good. Bad.
Okay, let's look at soft drinks. So let's look at Coca-Cola.
Good.
Go ahead.
No, it looks good. It's like I really like the way that in April that it ran up to that prior resistance area, and then look at it consolidate, really dull and quiet, and now it's starting to work its way back up through the overhead resistance. What's not to like here? It's a beautiful big structure that goes all the way back to September.
Okay, great. Let's go to the next one. Let's look at Monster Beverage. This was a really great recovery of the low in COVID, and then we are kind of in this big formation that has its own sign of strength, and the backing up action also has the trading range. So the resolution of this backing up action is unfolding right now. We need to see the confirmation by the relative strength, but there is no presence of supply so far, so I would be expecting a continuation. Plus, the group, the peers, are really confirming the overall attractiveness.
I'll be very curious if that becomes a persistent uptrender. That's a great looking chart.
This is a very interesting stock, and the reason why is because it has a lot of momentum characteristics. So what's your quick 5-second take on this?
You can see that the price and the relative strength are both in gear up, and you have what looks like the completion of accumulation here on the right side. Look how strong it's acting on the right side, and all the way up, including that reaction in late March. And that potentially is a completion of a count structure that goes back to March a year ago.
Okay. Last one, Celsius. Well, again, growth stock, the type of the stocks that I really like. I like to trade options on stocks, so this is exactly what I would be looking for. And we're in the trading range formation. There might be a possibility of coming to the high and then retracing back. Maybe there is a little bit more causality that needs to be happening, but this is definitely on my watch list. All right, let's go to somewhere else. Let's go to financials. And in the financials sector, let's look at the consumer finance. So our first stock here is going to be Discover. Bruce, your quick thoughts on this?
Well, reaccumulation after a really just robust advance since August, September. That was like a cause in and of itself. New causes forming now, and the potential for this to break out and go, I think, is real and has the potential to, especially with the economy reopening, that these stocks could really benefit from a reopening environment.
Okay, let's check out something else. So we're gonna look at Synchrony Financial, kind of the same look. So the same group, the same look. So very quick thoughts here. Relative strength is in the uptrend. Price is in the uptrend. So everything is confirming. I really like how the volume signature increases after some dull inactive period. So this suggests that institutions are getting back into this theme and into this stock. Let's look at American Express, Bruce.
So just big cause build. Look at that, June, sort of marching to its own drummer. June to October completes an accumulation and then goes into a really nice markup and appears to be getting ready to go again. And so just looks like a really strong uptrend.
Okay, let's go to energy now. And under the energy group, let's look at the exploration and production. And here, we're going to start with Occidental Petroleum. So a lot of energy groups had a really good day today. This could be the low of this reaction that we have seen. I think the main idea here for all of the energy groups like this is that we had a substantial cause. We had a really good sign of strength where we see and observe institutional demand. That produces the relative strength to go into the uptrend. And the most recent reaction could be just the reaction in the construct of the reaccumulation pattern that should resolve itself into the upside. Let's look for the confirmation in other stocks. Let's go to Valero Energy, Bruce.
Just a classic backup since mid-March. It's gone down. I think that the fact that it's sort of slightly sprung the late March low, and if it can turn back up, I think it's it can go right up to the prior high in the low 80s pretty quickly, and then again change a character if it can go up there and then not react back down. Look at the yield on this stock, and I think that it could be a favorite, especially among the yield seeking class.
Okay. Let's look at Holy Frontier. So kind of the same picture. I'm not going to even draw anything. But one of the things about the group, when you see the peers confirming each other, that confirms the overall thematical buy program by institutions, and that's exactly what we see. And also another comment here is that on all of the reactions, we're seeing diminishing supply characteristics, which is great. Okay, let's go to another group in the energy sector, pipelines, and let's look at ONEOK. Bruce?
Well, just a very important, again, part of that yielding class, bond substitute, consolidating here, but it's not reacting at all. And I think the stock appears to me, by the way it's trading, that it's been heavily absorbed, held by strong hands, difficult to buy in large quantities by institutions, which says to me it wants to go higher.
Okay. Another one is Kinder Morgan. So kind of the same story. It's very interesting. I'm observing that the pipelines are in this very tight range. I mean, like any stocks in the pipeline, except for one, home assignment to find that stock. They're all kind of consolidating in this very, very shallow manner, but which is suggestive that there is no selling whatsoever. And we need to see the resolution of that. I mean, I think that it could be just a simple continuation here, just because the whole energy sector is behaving this well. So we just have to see and wait what's going to happen. Okay, and the last one, Bruce, here is going to be Shell Midstream.
I would just say ditto to what we were saying about the prior examples. Looks like it's tightly held, hard to buy. Look at the relative strength. It just continues to have good demand, and the relative, see, typically these pipelines don't generally have dominant relative strength because a lot of the relative performance is in the yield, and the fact that you have price performing really well and you have yield is like it's a twofer. I'll leave it at that.
Okay. Let's look at a different type of energy stocks. Right now, they are located under the technology sector, renewable. And obviously, there is a lot of interest in the renewables. So I thought that today was very interesting as we are showing a lot of strength in energy in general, and specifically renewables had a really great day. And that comes after such a significant change of behavior, after some of the consolidation. So it kind of exhausted a lot of the momentum traders that were trading the uptrends. And that is suggestive of at least a rally to the to retest the prior highs into 220 about on in phase. So this is a very, very interesting group right now for me, and an interesting spot as well. So Bruce, let's look also at Sunrun.
Yeah, so this could be arguably a large reaccumulation type structure that had a climactic turn, climax, automatic reaction in September, October, range bound condition, and now I think your comment about, well, can it go up and attack the highs, I think would be the thing that we would look for here. So this very well could be the low risk entry place, and then see how it acts as it goes up to the resistance area.
Okay. And the last one is First Solar. So First Solar has a big, big formation to the left, multi-year formation. So you have to go and check this out.
Yeah, it's a big, do that, and it's a campaign type stock.
So climactic action, stop in action, kind of very obscure change of behavior, which defines the trading range. So here is our trading range, somewhat upsloping. Upthrust action in phase B, all located at the top, which is very, very good element of strength. Potential phase C was the spring and the test, diminishing supply characteristics. Demand is coming in currently, and that's why this is a very, very interesting spot. So we would be looking for some kind of continuation as a confirmation of this idea. All right, let's jump to something else, Bruce. We're actually beyond our time. So we're at 4:38, and we have about 6 groups left. So let's do this. Let's look at healthcare, because healthcare has been interesting in the last months or so, but we still think that this is most likely a space to be, because we're just seeing a lot of breakouts, and it's not necessarily that the trend is done. This is a very common mistake that we see by students, that once we have some kind of price movement, there is a reluctance to come in, but you have to think about the causality of a group like this or a stock like this. So here we're seeing a potential reaccumulation, sign of strength, a little bit of the climactic action. There is definitely a supply, so some stop in action. So we would be probably thinking, wait for the backing up action, and then attack it after the resumption of the uptrend. And look how the relative strength starts to improve out of the oversold condition. And we've seen quite a lot of stocks like this that we've shown you. So there is an expectation that as the price moves higher, the relative outperformance also will improve. Bruce, what about this stock here?
Reaccumulation type structure. You can see that off the COVID low, it had really good relative strength, and it just led the way up into July, August, and now it's completing some kind of a range-bound condition. If it can pivot up and out of here, it looks to me like a cause of large proportion, and that it could begin an important new uptrend.
Okay, let's look at Boston Scientific. So kind of the same story where we have a rally out of the oversold COVID-19 low, and then we are in the trading range. So this is a very, very prolonged trading range. I would probably identify phase C as here. We are currently in phase D. I really like the latest rally where demand is increasing significantly after a period of somewhat of inactivity after the minus sign of strength. And relative strength is basing and is trying to break out. So a very important confirmation comes after the price moving higher. The relative strength might do the same, and that would act as a confirmation currently in the potential sign of strength rally. All right, let's go to medical supplies. And under the medical supplies, our first stock is Edwards Lifesciences. Bruce, your comments?
Just that after a long reaccumulation, it's resolved itself out of that, and you jump up and out. You want to be looking for the conditions of the emergence of a new uptrend. It may have to pause here, back up slightly. If it has a really shallow, brief, non-volatile backup, that sets up the condition for a good rally. So this is a really good and interesting place for a stock.
All right, next one on our list is Align Technology. So this is definitely an outperformer in the group. We're seeing that there is nothing that is holding the stock behind. I mean, look at where the buying climax is happening with all of the characteristics of the gap, increasing volume signature. We've just experienced phase C, and we're probably in a sign of strength of phase D. Relative strength needs to confirm. I like how supply is diminishing here, suggesting that there is no significant selling. The price needs to go up, and relative strength will confirm that uptrend. Okay, let's go to IDEX Laboratories. Bruce?
Well, just look at the relative strength line. It's just like persistently outperforming. Love stocks like this. Now has turned down below the moving average on the relative strength, but this is associated with what could be a reaccumulation. And once you get up and out of a reaccumulation, the relative strength tends to reassert itself, and that's pretty typical. And here we are knocking on the doors.
All right, let's go and look at the next group, which is the biotechnology. So biotech stocks are slightly behind the medical supplies and medical equipment, but there is definitely a lot of interesting candidates that we would like to look at. All right, EVI is in the potential reaccumulation here. I really like this low, which is so much higher than the COVID low. What's not happening for this particular stock is the lower high on the relative strength. So we would like to see a confirmation of the relative strength that would go up and break out of this pattern. Higher low would be very nice here. So for that to happen, the price needs to start accelerating out of this formation, and that's what we're looking for. It looks like we're on the way there with supply diminishing, and we potentially in phase D. Okay, let's look.
Bond substitute also.
Okay, let's look at Regeneron, Bruce.
Here's a stock that's been out of favor, relative strength since June, July of last year. Look at the top that's been put in the stock, a distributional type structure, very interesting. Downward trend, but now it's crowding up against the long-term moving average for the relative strength, and it's trying to make a base here. I really like the way that the late March decline made a higher low, and then after that, the inability to react at all, just really tight, quiet, sideways action into April, and now it's trying to rally and make higher, on a local basis, higher highs. So I think this could be a cause building process. Curious if this stock can work its way back up to the highs.
All right, the last one on the list for us for the biotech is Amgen. Again, look at the long-term causality of this, and then we are discussing the short-term trading range right here. We want to see relative strength starts to confirm that only will happen if the price will start to accelerate. Potentially, we've concluded this structure, but I would be actually curious to see how much supply we're going to have relative to this bar around the area of where the price is right now. So we need the confirmation of the strength behind this move. Okay, let's go to another group. Let's go to the industrials, and let's look at the railroad stocks. So there are not that many of them. So let's look at Norfolk. Bruce?
Well, just a persistent uptrend. Relative strength that just pulled back to its moving average, which is a great place to initiate or add to positions. And the trend is just now in a stage where it's persistent. So so it's gone from stair stepping to now the trend looks like it wants to just sort of persist.
Okay. And let's look, I missed one here. Okay, so CSX, really good day today, a breakout day, a lot of demand that's coming in. And you could see how the relative strength behaves on days like this. So whenever we say we need a confirmation by the relative strength, what we really mean is that we need to see the price accelerating in such way that it would outperform the market, and that's exactly what is going on here. Formation on the formation, and we are, I believe, at maybe even all-time high. Peers are confirming, and the uptrend is on. Really good look right here. Okay, let's jump to another group, industrial suppliers. And Bruce, let's start with W.W. Grainer.
Yeah, great company, and really old line value type company. And you can see here it's just been consolidating. It's pivoting up. Love all things industrial and part of the value composition of the market. So here it is getting ready to reassert its uptrend, and we'll watch it closely to see if it can persist in this.
Okay, let's look at Fastenal. Very beautiful structure with the second point of view right here in the potential phase C. We're in phase D in the sign of strength type of price action. Supply came in, but look at the inability of the price to register a significant reaction, which is extremely bullish. We want to see a confirmation by the relative strength, at least locally. It needs to overcome this high, and that's what we're looking for. But the previous rally off COVID low is actually, quite dynamic. So we would be expecting.
Look at the relative strength back there in Fastenal at the COVID lows. It just keeps marching up, making higher highs, higher lows in the relative strength. So it's very well run company too.
Okay. Last stock in this group is gonna be Arconic. So this is a very interesting look, Bruce, because of the IPO. So a little bit, of the growth characteristics here that we see, and specifically, latest formation. Your quick thoughts on this?
Just looks like it's trying to make higher lows, especially off of that February low, and we'll see how quickly it can get up to the resistance area and potentially assert an uptrend from there.
Okay, we've got one more group to go through and three more stocks. So bear with us. This is industrial machinery, and we're gonna start with Dover. And when you see something like this, the first thought should be it's an uptrend. So you need to assess what kind of causality, potentiality of the next move we're gonna have. Any type of PNF counts. Also look into the left, into the long-term trading range, what's out there. And we could see that this area right here on the relative strength is exactly what we were looking for in other stocks. It's the ability to create a higher high followed by a higher low and then the breakout again. And that happens on the increased demand signatures with the breakout. So most definitely an uptrend. Okay, let's look at Illinois Toolworks, Bruce.
Well, the stock had it's really been sort of in a causal trading range since August, and now look what it's doing. It's gearing up to try to get out of that structure and start an uptrend. So what more can you say? And just a great industrial company too.
Okay. Last stock, Rexnord, also higher highs, higher lows, uptrend. We have an apex formation right here. So resolution out of those are usually, quite dynamic. Previous reaccumulation range also had a really dynamic sign of strength. So that would be our expectation. We see how supply has diminished significantly. We need to see the confirmation by the relative strength. Usually that's going to be lagging a little bit on the way up. So confirmation by the breakout would be exactly what we would be looking for. Okay, well, Bruce, surprisingly, we went through all of them. Everything that we wanted to do today, we actually done. So, wow, kudos to us. Your final thoughts? Yeah, your final thoughts on the session?
Just that it's going to be a really interesting time. I think rotation is going to be the watchword here for us as we go forward, not only for the market but also for Wyckoff Market Discussion, and that we are going to just try to stay right on the leading edge of what is performing best. And so we hope that you'll give us, some consideration. Join us, see whether or not we can bring value to your campaigns and your work.
Yeah, don't forget about the promotion. It's going to last for a week until the next session, $79 per month, $20 off the regular price. Again, for those of you who are current subscribers and you're at $99, do not worry. We're going to lower the price for you with this promotion to $79. You have nothing to do. And also, check out our other offerings. Go to wyckoffanalytics.com. Check out our on-demand classes. We just had a series of open door classes on tape reading, on Wyckoff Trading course, part 1 and part 2. Check out Bruce's blog, power charting episodes, anatomy of the trade, crypto reports, crypto discussion, crypto Discord. We have quite an extensive product line, everything Wyckoff related. And with that, thank you so much for being here. Thank you so much for your participation, for your questions, and we hope to see you next week.
Thanks, everyone. Have a great week.
Bye-bye.